there, it's Julie Broad with Revenue.com, and I've got a quick little video tip for you. It's coming after last week's headlines that you may have seen about Canada creating 2 times the job growth in January than the United States, which has a significantly larger population than Canada. So that was a significant stat, and of course the job growth was quite a bit higher even than forecasted. So it was a good news thing. Because job growth does mean impending strength in the real estate market in general. And that's part of the point I want to make today is, yeah, it's great that all of Canada created 2 times more jobs than the United States. That's a good thing. But I do want you to realize that doesn't mean anywhere in Canada is a good investment, and it doesn't mean that anywhere in the US is necessarily a bad investment just because it didn't have the high level of job growth that Canada did. What you have to do is take a stat like that and then figure out where exactly the job growth was. Is it in a particular province? And then dig it down a little deeper. Is it in a particular city? And the same thing for the United States. I mean, there's not job growth, but there still are areas in the United States that probably have good market fundamentals. Well, they do have good market fundamentals. You have to look for those. You have to find where there are jobs being created and invest in markets that have that kind of economic stability for the future, for future strength to attract more people into the area, to pay those people so they have money to pay you rent or to buy the houses from you, and to drive that economic area in general. So that's one thing, is national numbers are interesting, but they're not really meaningful, and generally I don't pay that much attention to the national numbers. I tend to stay very focused on my little area, and I just poke my head up every once in a while to see what's going on around me so that I'm not missing big things. The other thing I wanted to mention is that if you haven't already, I highly recommend you read this book. It's called The Housing Bubble by Kieran Trass, and it gives you a lot of really important information to understand real estate cycles, but also to get behind the headlines. So no matter what the headline is, you can kind of read it and know what to look for to figure out if this headline is something that's going to drive or be a part of driving the real estate cycle, up, down, sideways, whatever, or if it's actually just an influencer. And influencers are important too because they create opportunities. A prime example was here in British Columbia, where we live and invest, when the HST was introduced. It shut down the real estate market, well actually, it combined with it being summer, which is slow anyways, shut down the market. And as buyers, we found a lot of good opportunities. Conversely, right before the HST came in, there was this massive buying frenzy, and it was tough to buy deals then, but prices had a nice lift. So it just depends on what side of the equation you're in or on, and how you interpret the headlines. And this book helps you understand when it might be an influencer that gives you a short-term opportunity, or it's a market driver. And if you're doing buy and hold investing, you really do want to understand market drivers, because they're the things that are going to impact your rents and your property values over the next 2, 5, 10 years. So pick up a copy of this book so that you don't fall into the trap of thinking something influencing the market is actually a driver, and to look at your local market and see what's actually really happening behind the numbers, and if it's impacting your local market the same way as it is nationally or not.